So now we are going to revise purchase return book and sales return book. So purchase return book, what do we record here? We record return of goods which were purchased on credit. So when you purchase goods on cash basis, that is, you paid cash and purchased goods, and if you're returning those goods, will that be recorded here?
Your voice is breaking. Could you repeat?
If you have purchased goods on cash, by paying cash you purchase goods. Now you're returning some of that goods. Will that return be recorded in this purchase return book?
No.
No, correct. So only the return of goods which are purchased on credit, means whatever credit purchase you record in purchase book, in respect of those goods which you have recorded there, if there is a return, then that return will record here in the purchase return book. That you should be very clear. Similarly, when you have purchased an asset and you are returning an asset probably for some reason, then that return also we will not record here. Why? Because the purchase of the asset which was on credit was not recorded in the purchase book. It was in journal proper. So the return of that asset purchase on credit which is being returned now also will not be recorded here. Only return of goods which were purchased on credit would be recorded in the purchase return book. Is that clear?
Yes.
What could be the reasons for return? There could be many. It could be like the goods were defective. There was some defect in the goods that were supplied. So you identify those defective items and you are returning that. Or it is not as per the order. Whatever, when you place the order, you had specified, given the specification, and now when you received it, you found that it is not as per order. So you will not accept it. Or it is not as per sample. Some sample was shown to you when you went to purchase. So you ordered on that basis. Now the goods which received were not as per sample. Then you might return it. Or there might be late delivery. Means you had to get a delivery on a particular date, but it is delayed a lot. Then you might have gone and purchased from somewhere else. Now when the delivery comes here, you might say, I don't require it anymore. So these are several reasons because of which the return of goods can take place. Now, important point that you have to know is when you purchase goods on credit, what is the journal entry that you pass? We debit the purchases account and what do we credit?
Creditor.
Supplier or the creditor account. Now, when goods are being returned, we have to pay lesser amount to the creditor. So, when there is a return, we have to debit the creditor account, correct? And we credit the purchase return account. Is that right?
Yeah, correct.
So, what are we doing to the creditor when there's a return? We are debiting them. And that is why when purchased goods are being returned to the supplier, the document that is prepared is called as debit note. Why a debit note? In that note, you are specifying that this particular creditor is being debited. Got it? So when it is purchase return book, a debit note is the basis on which you are going to record the transaction. From the debit note, you will know the purchase return and record it in the purchase return book. Is that clear?
Yes.
So in the debit note, you will have the details of the supplier, the quantity and the value of the item goods that is being returned, and also the reason for the return. All that would be available in the debit note. Using that, entries would be made in the purchase return book. Now the format part, it is similar to your purchase book. Only thing is that there you had the invoice number. That invoice number column is being replaced. So first you would have the date, that is the date of the transaction. Then you would have the particulars column. The particulars column will write the name of the supplier, the details of the items, the quantity, the rate, the trade discount if any was given before. The same thing has to be subtracted again here. So that detail would be in the particulars column. Followed by debit note number. So like in the purchase book we use the invoice number. Here we use a debit note number. We'll note it here. Rest of them are the same. You will have the ledger folio, then you would have the details and the amount column. In the details you would write the individual items, total, subtract, all that you would do. And we'll have the final total here, and the amount that is given will be written here in the outer column. So this is how a purchase return book format would look. Clear?
Yes, ma'am.
That's it. Now shall we go to the sales return book? Any doubt in purchase return book? Any part you want to re-explain?
No, we can move to sales return.
Ashish, clear?
Yeah.
Next is the sales return book. In the sales return book, what do we record? What do we record? Goods returned by the customer of the business or the purchaser of goods, whoever has purchased from our business, from that person, which was sold on credit. So if the goods were sold for cash and then goods is returned, that is not recorded here in the sales return book. If an asset was sold on credit and it was returned, that is not recorded here. Only the goods which are returned, which are related to the credit sale, that would be recorded here. And here again, important underlying document which forms a basis from which we are going to get the details to make the entry in the sales return book is called as credit note. So to understand why do we call it credit note? When there is a credit sale, what is the journal entry that we pass?
Debtor account debit to sales.
Very good. To sales. Now, when goods are returned, there is sales return or return inward. What is the journal entry that we pass?
Sales return account debit to debtor account.
So what are we doing to the debtor? We are crediting him, no? So that is why the document that is prepared is called as credit note. In the credit note, that particular document, we are specifying that the debtor is being credited with that much amount. The details of what is the quantity, what is value, the trade discount involved, all that will be given, and the reason for the return also will be incorporated there. And from that credit note, we know that this is a sales return and we are supposed to record it in our sales return book. Clear?
Yes, ma'am.
Now again, the format part, it is going to be the same date part, where you will record the date of the transaction. Then you would have the particulars where you will write the detail of the customer who is returning, the quantity, the rate of the item, the trade discount if any would be subtracted, and then you would have the credit note column. Credit note number will be written. In the sales book, there's invoice number. In sales return book, there's a credit note number. Followed by the ledger folio, the details column, and the amount column. The posting would also go in the same way. The total would be going into the sales return account to the debit, and individually whoever you have, the amounts, whatever you have, would be going, we'll be writing the ledger folio number here, into the debtors account to their credit. Got it? Is the posting clear?
Yes, ma'am.
Any doubts in the sales and purchase return book?
No, ma'am.
No. Now we'll just orally discuss one illustration, number 9. On page number 11.17 of the textbook. Have you got that particular question? Page number 11.17, illustration number 9.
Yes, ma'am.
Look at that. Record the following transaction of Harry Marketing Amritsar into proper subsidiary books. Like this question you can get. Instead of individual book, they can give you the transactions. You have to segregate them into different books. Okay. Close the subsidiary books on 31st Jan and post them in ledger account. So first transaction, January 1st wala transaction. Purchase ready-made clothes from Mahindra of Delhi of the list price 40,000 less 10% trade discount. Now tell me, in which subsidiary book would this transaction go? Where will you record it?
One second.
Purchased ready-made clothes from Mahindra of Delhi of the list price of 40,000 less 10% trade discount.
It will be in the purchase book itself.
So this transaction you have to record in the purchases book. Next, January 5th. Sold ready-made clothes to Mohan Amritsar for 10,000 less trade discount 10%. Sold ready-made clothes to Mohan Amritsar for 10,000 less trade discount 10%. In which subsidiary book will we record this?
Could you repeat?
Say sold ready-made clothes to Mohan Amritsar for 10,000
Oh, the
less,
second one.
yeah, sales book.
Sales book, yeah.
We'll record that in sales book. Next, January 6th, the transaction. Return goods to Mahinder of the list price of 5,000. You're returning goods to Mahinder.
Return.
Purchase return book because you had purchased from Mahinder which you're returning. Good. Next, Shyam Singh Delhi sold ready-made clothes to us for 30,000.
It will be in purchases.
Correct. Don't just read sold and record in sales book. No. He sold it to us. Means we purchased it. So for us it is purchases. So it is purchases book. Sold ready-made clothes to Harish Amritsar for 12,000.
Come again, sales book.
Sales book. Then sold ready-made clothes to Mohan Amritsar for 6,000. Allowed trade discount 10%.
Could you repeat?
Sold ready-made clothes to Mohan Amritsar for 6,000. Allowed trade discount 10%.
On sales.
So correct. Then sold ready-made clothes to Mahesh Varanasi for 8,000 on 27th.
Sales again.
Sales book. So this is how you have to prepare for this question. Purchases book, which would have two transactions. January 1st, January 7th.
Okay, the purchase return. Yeah.
Sales book would have January 5th, January 8th, January 19th, and 27th. And there will be purchase return book prepared where you will record one purchase return of January 6th. Got it? Is that clear?
Yes.
So that's it about the. This is how questions can appear in the exam. You just have to read carefully. In case in between this there is a cash purchase, cash sale, ignore it. If there is credit purchase of fixed asset or credit sale of fixed asset, ignore it. Write note for that and take only the credit purchase or say credit sale of goods and the purchase return associated with the credit purchase and the sales return associated with the credit sale. Take those transactions, then segregate them into the different books. Prepare the different books individually and post those transactions to respective books and total it up. Okay? I hope it was clear.
Yes.